Hi, everyone. Welcome to the 99th episode of the Timing Research Show for August 15th, 2016. Today we will be talking about the 151st weekly report from Timing Research. So if you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Dave Landry back this week to host, so I'm going to go ahead and turn it over to him.
Thank you, David Cosman, and thanks to Timing Research for having me back once again. Looks like we've got a pretty good lineup again this week. I recognize most of the names, I think. Has everybody been here before? I know, Dean, you've been here. Corey, I think you might have been here once, but I haven't hosted every show. How about you, Tom? Have you been to every show? Attended?
No, this is my first time joining. I have listened before, but excited to be
here. Okay, all right. Well, we're mostly gentle, so okay. Well, while I have you, tell us a little bit about yourself and tell us a little bit about SevensReport.com. Last name is Essaye.
Essaye, that's right. Yep, absolutely. Yeah. So Sevens Report is a daily macro research report. I affectionately call it a poor man's Gartman letter because it's similar in commentary, but just costs a lot less. Most of our subscribers are financial advisors, although we do have individual investors as well. Mostly macro-based, thematic calls and picks, and just sort of tells you everything you need to know by markets by 7 a.m. and under 10 minutes.
Cool, cool. Adam, let's go to you. You're up next. Adam Johnson from BullseyeBrief.com. Tell us a little bit about yourself and tell us a little about your trading and BullseyeBrief.com.
Yeah, hey Dave. I launched Bullseye about 4 months ago, and unlike Tom, who writes every morning, I'm just putting 3 ideas in front of you every 2 weeks. And it starts with a macro concept, and then I drill down using a lot of data out of the terminal, the Bloomberg terminal, and just talking to guys on the street that I used to interview when I was at Bloomberg Television anchoring the show for several years. Prior to that, I traded oil and stocks and stock options for about 20 years. So basically what I'm doing is distilling 25 years of working into something I call Bullseye Brief, and my 3 best ideas, the 3 ideas most worthy of your time every 2 weeks.
Cool. All right, Corey, let's go to you next. Corey, I was going to wear a red shirt today, but I couldn't find it. It must be in the wash. So
you know me. Every time I do the presentation, it's got that red shirt on.
Corey usually has his power shirt on. Corey and I go way back. To those of us who don't know you, Corey, Corey Rosenbloom of AfraidToTrade.com. Tell us a little bit about yourself, your trading, and AfraidToTrade.com.
Sure, Dave. Good to be here. Thank you all, Dave, for having us this morning.
Glad to have you.
It's really cool because we have the macro concepts. That's what I got started with. I'm known really now as an intraday day trader of the futures market, and I do 2 different reports. I do a daily commentary that plans out the next session and talks about educational lessons from the daily report for the S&P, Dow, and the NASDAQ. But I also do the weekly commentary, which is also macroeconomics. So it's looking at gold, oil, treasuries, currencies, and of course the S&P, how they all tie together. So it's really cool to all 3 of us. I'm looking forward to this presentation or this call today, because we're all going to be sharing the same thoughts on this bigger picture money flow and how these markets tie together. But I'm just really do my trading now on the intraday levels as a 15-year sort of person that's been trading and investing this. So it's really exciting. This is going to be fun.
Cool. Yeah, one of the complaints about the show is there's not enough controversy, so we'll see if we can stir the pot at some point.
We're on the same page today, probably.
Dean Jenkins, another veteran of the show. Dean's over at FollowMeTrades.com. To those of us who don't know you, tell us a little bit about your trading and tell us a little bit about FollowMeTrades.com.
Okay. Yeah, it's great to be back here again. I did get the red shirt memo this morning, so I'm in uniform. Yeah, so I'm Dean Jenkins of FollowMeTrades.com. My site launched about a year ago. I've been trading and investing for about 20 years, and in the last 3 or 4 years, really dialed in a trading system now that I've been repeating and getting really good results with, and launched my business. I'm a pure technical trader. I spent years. I got an MBA, and I spent years doing fundamental analysis.
I got one of those too.
Finally threw in the towel and said, this doesn't work, there's got to be a better way. Yeah. And so I'm a pure technical trader. I scan for a couple key things before I put a trade on. Is there going to be M&A activity? Is there a bankruptcy? Is there a drug trial? But other than that, I'm just looking at the charts, and I find the reality of the charts to be remarkably accurate when you do get a good setup. I run a live trading room for intraday futures trading and I have a stock pick service for longer-term stocks and options on the daily charts, and I have a series of education courses. I use primarily Elliott Wave and Ichimoku together, so it's East meets West. And when you get two trading systems that are really different, and when they agree on a trade, it's pretty spectacular. So that's a quick snapshot of what we got going on.
Cool. Okay, to those of you who don't know me, I'm Dave Landry from DaveLandry.com. I've been trading. I stopped counting at 20-something years, but I've been at it for a while. I've been providing internet-based comedy, a little bit of comedy here and there, commentary since the mid-90s. You can check out my website, DaveLandry.com. I have over 500 posts and plenty of videos there, over 1,700 videos on YouTube. And I believe when it comes to trading that you can only predict the short term, but you can stick around longer term. You can only predict so far, but you can follow forever. So I am a trend follower, 100% technical, like I think most of us here, or some of us here at least. I know Dean just said he was 100% technical. So I don't believe in using fundamentals. And again, I believe you can only predict the short term. It's kind of akin to predicting the weather. If it's cloudy and thundering outside, as it has been doing a lot this weekend in Louisiana, I know it's going to rain soon, but I don't know, and I hope it's not going to be raining next week or a month or a year from now, whatever. But we had enough. Anyway, I think you can only go so far out when it comes to trading. So I start off with a swing trade and take a portion of the profit off at that swing trade, and then hopefully hold on for a longer-term gain, because I think that's where the real money is. Okay, my order is mixed up today. Did we get to everybody? Let's see, Dean, Corey, Adam, we got to you, right?
Sure did.
Okay, fantastic. And Tom, we got you. You were first, right? Okay. Yep. All right, let me try to get these guys, get you back in the straight order here. Tom, let's go to you. What direction do you think the S&P 500 is going to head? And that's from this morning's open to Friday's close. And then once you tell us which way you think the market is headed, rate your confidence to that answer by estimating the probability you have correctly predicted the move.
I think we're probably heading higher this week. From a confidence standpoint, I wouldn't put it a ton above 60%. It's going to be a quiet week. None of the events that are lined up this week, whether it's retailer earnings, Cisco earnings, the FOMC minutes, the ECB minutes, none of them are probably going to create too much of a shock. Rates are still low, and I think that amidst a quiet sort of, the doldrums of summer environment, the market probably lifts. I wouldn't be surprised if we hit 2,200 at some point this week. Okay. And on the next, if you want, on the next segment, when we ask as to why, feel free to show charts if you'd like, or at any point during the presentation if you want to do that. A lot of people like to see the charts go up. Adam, let's go to you next. Adam Johnson, what direction do you think the S&P 500 is going to head this week from today's open to Friday's close? And then after you let us know the direction, go ahead and rate your confidence.
Yeah, we are going higher in my view, and I'm confident in my view, and I will tell you why. We are finally starting to get some clarity on this election, and there's not a Trump, most likely, that's going to find his way into the White House. I think that removes a huge overhang that's been plaguing the market. You just look at the polls; they are anywhere from 8 to 12% in some states. New York, where I am, it's quite a bit north of that. Admittedly, a Republican White House and a Republican Congress is the best of all worlds. Historically, you get the strongest returns, close to 15% per year when you have that combination. I don't think we're going to get that combination, but I will tell you, right close behind that is a Democratic White House with a Republican Congress, both houses. That is still very strong for the market, and I think that we're going to find that Ms. Clinton is far more moderate than the people in the Trump campaign would believe. I think the markets are going to like that. Granted, we are going to be coming into a seasonally weak period starting in September, but right now it's August. There's not a whole lot of reason to be out of stocks. If anything, there's all more reason to be in. You just look at what happened with the Bank of England's attempt to try to pull people out of bonds last week. Didn't work. They're holding on to bonds. They're holding on to yield. And I think as a result, people are saying there's really no other place to go other than stocks right now. So I am confident in my view we're going higher this week.
Well, one thing that's kind of interesting, and without getting into politics, but it's kind of interesting what happened with the Brexit deal. everyone, the polls were that it was not going to happen, and then it happened. So I asked my token British friend what happened, and he says, well, nobody wanted to admit to a poll that they were for the Brexit because it was perceived as being racist or not caring or whatever. So I'm just curious, when that happened, I just thought that might be a microcosm or macrocosm of what could happen over here where no one's coming out for Trump. But I guess we'll just have to wait and see what's going to happen there. Corey, before we get lost in politics, what direction do you think the S&P will move this week? And rate your confidence to your answer on that. Oh, we didn't get a rating from you, Adam. What percent is correct? What percent do you think your probability you predicted this week's move?
75% or better.
75%. Okay. All right, Corey, back to you.
Politics is my second love. I actually worked in the Congress back in 2004, and so I have actually a master's in public affairs. So I love politics. But yeah, I'm in California too, so this state's going to go blue for Clinton. But yeah, we'll talk about it later. But in terms of
absolutely,
it's going to be coming to the swing states. It's about 6 states going to determine this election. It's kind of a sad commentary, but it's the way the Electoral College works. But anyway,
yeah.
So yeah, on the market, it pains me as well to say this market probably does close higher. It'll be about the 9th week in a row to the upside. It's just the statistics are on the side of an up close, low volume. It's an options expiration week. Fed speak in the middle, nothing really much going on. Earnings is pretty much behind us. Just looking at models, and I'll show this in the chart after a while, but just we have these consistent rallies, consistent runs, creeper trends, etc. And I wouldn't say they're more common or more likely, but they have been occurring much more frequently from 2009 to present. So just one more up week, I'd say low volatility, and it's going to be an up close. And again, that just as a statistician, trader, fade trader, etc., it's painful to watch this thing creep up, but it probably keeps doing that. And I'm going to go ahead and just go at 25% probability. Okay. I'm not that confident, but just based on the recent things and trends and all the things we'll talk about later, I just got to go to the upside there.
Yeah, this market has rewarded the buy and hope crowd for a long, long time, and that'll work until it don't. But so far, it seems to be working. Dean, let's go over to you. What direction do you think the S&P is going to move this week? And then rate your confidence.
I got to weigh in on the political commentary, right? Without getting political. So I'm just in the south of the Seattle area, so I live in Bernie country, which is really painful. But yeah, I think whichever candidate wins is going to be bad news for the market, and the market will respond to bad news. It's just same direction for different reasons. That's my opinion, but that's a guess. That's subjective, and I have no idea who will win. I think we'll all lose no matter who gets elected from this lineup.
You're saying by puts?
Yeah. What's the joke? Death by Buddha? Bunda? Oh man, I have to Google that one. Oh goodness.
So in terms of market direction this week, I love Corey's comments, and I think gentleman before him used the word summer doldrums, right? So there's no controversy so far. I think higher, and it's just a super reluctant projection of higher, but I'm a technical trader, and that's what the charts and the patterns say. And we put in new intraday highs today. It's like, pretty thin air, man. It's like standing on the top of Everest without supplemental oxygen right now. We're at pretty lofty levels, and that's got to correct at some time. But the technicals just give us a few more highs. And again, there's no big news. The FOMC minutes, the meeting, the announcement already happened. This is just the detail. So, earnings winding down. No big news coming unless there's breaking news, and we can't plan for that. So
yeah,
technicals say higher, and low confidence on that. 20%, and I look forward to showing a chart. I hate talking about the market without a chart in front of me.
Yeah, I'm with you on that.
We'll get there, but yeah, higher, reluctantly higher, about a 20% confidence on it.
Gotcha. Well, my nickname is the trend following moron. So as a trend following moron, somebody called me that once, and I was all offended and it hurt, and then I got to thinking maybe I am a trend following moron. So I had some T-shirts made, some buttons made. That say just that. I don't think I have a button on my desk, but I'll have to get one for next presentation. And so as a trend follower, I'm not going to argue with new highs. And the key word in trend following is the word follow. and we'll pull up charts here in just 1 minute. There's a little fake out pattern that happened recently. Some people call it a bear trap, and I think that's kind of an interesting way to call it. I call it a volatility breakout, but that'll make more sense in 1 second. So I'm going to go higher, and I think predicting the market, the overall market, is more difficult than predicting direction of individual stocks. I often say, as I said earlier, you can only predict the short term when it comes to markets. That does not mean that you can always predict the markets. But I'm going to err on the side of the trend, say it's going to go higher because it's been going higher lately. That's what a trend follower does. Maybe that's why they call me the trend following moron. But I'll give it a confidence of about 60%. I'm not super confident in this market, as I think Dean pointed out. At some point it will correct, and when it does, who knows? So, Adam, we got you were first on that one, right? No, Tom. Let's see. I'm all mixed up today. Okay, let's go back to.
I got everyone off on the political thing.
Yeah, I'm all mixed up. My wife has like $20,000 worth of printers next door, and I went to print everything up, and the computer got, I guess, like Lighted got it over the weekend. So I'm kind of working blind here a little bit. But let's go back to Adam first here, and then if you want to share charts, if you have that capability, that'd be awesome. If not, no worries. Let me read the actual question.
Yeah.
Basically, it's the why to answer number 1 and 2. Share your specific reasons why you think the S&P is headed in the direction you choose.
So what I told you is that we've effectively removed this overhang on politics. I'm not going to repeat that because I don't want this to be about politics. But I think that has been a massive overhang. What really intrigues me is the fact that people are buying on bad news. There are a couple of industrials that recently have had just terrible earnings calls. I was going through a transcript earlier today, and it's unbelievable. In fact, I'm going to be writing that up in Bullseye, which comes out this weekend, the next edition, that very strong-handed buyers are buying on bad news. And I think we're starting to get to the point, and Tom and I were talking about this last week, where you have to start looking at the groups that have been lagging because you get a group that lags long enough, and every dog has its day. You can't keep justifying staples at 30 times, a Church and Dwight at 30 times, or utilities at 22 times. And by the way, some of these staples that are now trading 28, 30 times, they're yielding like 1.5%. So the whole reason you bought them, which was yield, no longer exists.
Yeah.
So I think you got to.
The problem with relative strength sometimes is momentum guy. I'm like, hey, buy it as it goes up, but eventually relative strength kind of ends badly, and they become a source of fun. So I hear you on that. Yeah, sorry, cut you off.
So I think there's this sort of, as my old boss and mentor used to say, the guy who was the vice chair of Lehman and then ran Furman Cells, awesome guy named Ed Hagem, 80 years ago on like 27. He says you get these rolling corrections, or sometimes you get these rolling bull markets where people aren't necessarily selling so much as just, in this case, buying new stuff. They're not going to sell necessarily these utilities and their staples because they still want, whatever yield they're able to get. But some of that cash that's just been kind of hanging out, they're deploying it elsewhere. And maybe that's in banks. I know Tom likes some of the cheap banks. Or maybe that's some of the industrials that have gotten crushed, or something I'm going to talk about later, maybe taking some money off the table out of the miners that have gotten totally detached from gold. You redeploy that in something you perceive as cheap. Anyway. I am positive on the market, and I think there's a sort of rolling move into some of the other sectors that have been kind of lagging.
Okay, cool. All right, let's go over to you, Corey. The routine. What specific reasons are you predicting the market to head the direction that you have said, which is up, I guess?
Let me create some controversy. I think with that, just one quick moment. I obviously agree that Clinton won the presidency, but I think the Democrats will take the Senate in terms of swing states, and they're pulling down, and I think it takes 5 seats to capture that majority. I think they may get that in terms of the vote there. So I think the Democrats take the Senate, but everything else in agreement, which is kind of fun, little controversy there. But anyway, this is what I'm looking at. So Dave mentioned this. It's the trap scenario. These little highlights here are these bear traps. It's a weekly chart of the S&P. Just a couple indicators, but mainly looking at these little pivot points or buy points, factor 1, and they've led to these major rallies, and you see them here, late 14, 15, and of course 16. Other one, let's look at consecutive closes, just a model chart, and I'll highlight it. All this is the green arrows. are how many times the S&P has closed up in consecutive weeks in a row. And really from 2009, it's happened once in 07. And from 9 to present, it's happened multiple times. Technically, we're up about 8 weeks. A little thing in the middle bumped down the stats on that. But still, we're up 8 weeks, going to be 9 weeks in a row, looks like. But the main idea of this is that these little rallies, consecutive rallies, and go back and look at them on your own time, of course, but it's just more common than not, or more common than it has been. And you can go back further and just see that 2003 into 4 was the last time we really got these type of movements, and they're just statistically occurring far more likely, be that stimulus, be that the recovering economy, be that whatever else, QE 1, 2, 3 twist, all these kind of things. But that's just what's happening. So, and drop in the daily chart, we're in this low volatility, and this is what my models are showing. We're kind of repeating the same, kind of jump this in here, on this one. Same little model with just flatness. This was back in July. And these little flat up, down, up, down, up, down, up, down, and now we're kind of in that same spot. So it feels like, yeah, it definitely feels like the market should pull back. We're overextended, divergent, all these little factors on technical analysis, but my goodness gracious, it's just really hard to go against this level of trend strength, buying, money flow, etc. So that's kind of where I'm coming from this week. It's it's painful, it's weird, it's uncouth, but it's what's happening. So we'll go ahead and go with that as long as it can.
Gotcha. All right. Dean, let's go over to you. Same question.
All right. Hopefully my screen is showing here.
Yeah.
Got the nice Corey. See Corey, another trade station guy there. That's cool, man. And I love all your adjectives too. Weird and all that kind of stuff, man. So, so I've got the E-mini, the S&P 500 futures contract on a 60-minute chart here, and what we've got is a little Elliott wave, 5-wave pattern, and we're in the 5th wave. And when you the cool thing about Elliott wave, a lot of people roll their eyes and go, I can't memorize all that. Elliottians can't agree. We use a really simple method. Just try and find wave 3, which is the biggest move. Wave 1 and 2 are before that. You get a retracement after wave 3 down to a Fibonacci 38.2 to 61.8. You got wave 4, and when you got 4 waves that have followed a known pattern, the 5th wave has a pretty high probability. And so on my chart here, we've got Fibonacci extensions giving us a target zone between 2191 to 2206. And this pattern's unbroken. We've got in this current wave 5, Dow theory tells us you got a trend as long as you get higher highs, higher lows, higher highs, higher lows. We got that. And we got the Ichimoku cloud agreeing. We've got a fast over slow, Tenkan over Kaijun, and we're above the cloud. Cloud's rising. It's got strength. So everything here says trend continues. Nothing here to tell us that the trend has broken. Although I agree, it's painful, it's uncouth, it's weird, right? But that's the reality, and we just have to trade the realities. And I really look forward to the eventual correction because that's going to probably be more fun, a little more dramatic, and we'll make some profit on that.
Gotcha.
So that's where I'm at.
Tom, did we go to you yet? I got a ticket next to your name, but I don't know whether we got to you on this question.
No, not yet.
Okay, good. All right, fantastic. Okay,
So,
same question.
Yeah, I'll take probably a little bit more fundamental explanation of why, and honestly, the reason that I think stocks are going to go up is the TINA trade is still alive and well. There is no alternative other than equities. You look at yields. Yields are grinding relentlessly lower. I mean, it doesn't really matter. Now the Bank of England is pushing yields down as they do their QE program. That's now spreading out across the globe, so you're seeing now even more demand for treasuries. And those low yields are justifying equity portfolio managers to be able to push the market up beyond historical valuation ceilings because there's nowhere else to go. And where else are you going to go with the money? I think everybody on this call agrees that, hey, are we witnessing the central bank-induced sort of bubble rally, whatever you want to call it? Probably, but that doesn't mean it can't go to 23, 24, 25, 2600 in the S&P 500 before the whole thing goes poof. And we got a big problem on our hands. But for now, as long as that goes on, it's going to take something material to break this. It's either going to have to be that the economy's rolling over, people start losing confidence in these central banks, and yields start going up on their own despite what they're doing. It's going to take something like that to kind of break us out of this.
Well,
and it's not going to happen anytime
as
soon.
I often say, unless you're Bill Clinton, what is. So it's going higher. What are you going to do? You're just going to have to follow along. I mean, very convincing arguments often come up in these presentations as to why it should not be going higher,
Yep.
but it is. Did Adam, you want to jump in with something? Somebody had jumped in earlier. Okay, no? Okay, let me see if I forgot to share my charts. Just 1 second here. Let's see if I get it shared. I've been saying throughout, I think we're going higher because we're going higher. I know it sounds like a silly argument, but that's what a trend follower does. You don't want to outthink it too much. I would prefer if we had cleared these prior highs in here more decisively, but it looks like we're trying to do that now. And the reason is because if you begin to correct and come back into the soup, then you've got 1.5 years of sideways trading. But so far, so good. Again, it is what it is. As Corey was pointing out, you had some bear traps happened. More recently, Corey was pointing out the up, down ad nauseum in here. Traders usually don't, what word I'm looking for, agree for long. And then notice that we had this fake out move. If you were to plot the volatility, you can just kind of eyeball it, which I often do. You can see this market hasn't gone anywhere in a while. We had a volatility fake out to the downside. That'll actually test out if you buy the opposite side. You don't take the first break, you take the other side. And so far, so good on that. Now, I'm not going to rush out and trade a system like this, but I know that it does have an edge, and it kind of helps me to build my case for the market going higher in here. So far, so good. Again, new highs gets, so far, new highs. Where else you're going to put your money is an argument that we just heard. I agree. At some point, that'll no longer work, but for now, follow along. Okay? All right, let's go to Tom. Let's go to you, Tom. And the question of the week is, let me just read to make sure I get the right one. What advice would you give and/or what resources would you recommend to someone who is new to trading?
I think the biggest thing I would say is that the secret to consistently profitable trading is about managing your risk and position sizing. So the idea that you're going to roll along and you're going to have a system that's going to give you, 8 out of 10 winners, that you're going to bat 800 or 700 is very, very, very unlikely unless you know something that other people don't know. So what makes a huge difference if you look over a long term as far as making money trading, it's being able to size your positions when you are right and keep your losses to as much of a minimum as you can when you are wrong. Because statistically, most traders are right between 55 to 62, 63% of the time. The really good ones, maybe they get close to 70, but that's most people. That's not a logical thing to expect. So
well, as Corey was pointing out a second ago, the multiple closes, you could actually. Years ago, I wrote an anthill strategy. I call it an anthill strategy because it was incredibly accurate, but you didn't make any money with the system. So it made you feel good until you blew up, and then you had to start over again. But you could actually sell the market after so many higher closes or buy the market after so many lower closes and get out of like the first profitable open. But that's not going to work longer term. But it's good to hear somebody grounded in reality as far as percent correct and realistic expectations. I didn't mean to cut you off. It's what I'm trying to say is good stuff. So anything else on that, or?
No. I mean, that's the thing. I mean, if you're gonna, as new to trading, if you're gonna read books, you're gonna buy books, and obviously knowledge is everything. You have to find out what works for you, what works for each one of you guys. Here on the broadcast wouldn't necessarily work for the other person. But the big thing is make sure you know how to position size and how to manage your risk and what will really work for you. Because if you don't have that foundation when you start, the likelihood of you being successful is really slim.
Yeah, one of my favorites.
Without buying a lot of very expensive lessons.
One of my favorite sayings is money management will cure a multitude of sins. So, all right, let's go. I think Adam went to take a leak or something. So let's go to you, Corey. What advice would you give and/or what resources would you recommend to someone who is new to trading?
Totally. I totally agree with Adam in terms of Tom looking at the risk control, risk management. I'll let his comment stand there. But the three things that have helped me in the years I've been doing this, it really comes down to it's just the 3M method. It's going to be the mind, which is your psychology, your mental state, and overcoming fear, controlling greed, etc. Method, I would say the mind's probably more important than that, honestly. a lot of ways to make money in the market. But methods number 2, that's going to be the consistent strategy to find the edge, to put the position size, to put the stop, to put the target, etc. And again, there's plenty of methods that can be done. Options, Forex, ETFs, so on and so forth. I think mine's more important than that. And the third, as the last discussed, is the market. And Dave, you hit on that too, that strategies and markets change, low volatility, high volatility, a persistent trend, creeping trend, no trend, flat trend, etc. So if you have, let's say, a fade strategy that plays off of fading a Bollinger or fading an extreme, and you do quite well with that, but the market's in this persistent up state, you may have the best mind, the best mentality, the best, etc., but if this market is in a different environment, you're not going to succeed. And the same thing for trend following. If there isn't a trend, you can have the best mentality and the best strategy, it's just not going to work. So it's that third thing, is that secret. It's that adapt your strategies with the market. And of course, beyond all the books and presentations, webinars, etc., lots of information out there, but we can always name dozens upon dozens upon dozens, but the big one would be Trading in the Zone. Mark Douglas, great book to reference. Anything by Dr. Steenbarger, Enhancing Trader Performance, Daily Trading Coach, etc., and the Market Wizards, because that's going to give you, if you're brand new to the trading environment, they talk about, I think there's 2 books now, maybe 3, from Jack Swagger. It's going to be fundamental trading, it's going to be algorithmic trading, it's going to be short-term trading, day trading, whatever, commodity trading. He's going to talk to individual traders and how they succeeded, how they failed, what their lessons are, and I would just recommend doing that, starting with Trading in the Zone, and of course the Jack Swagger's Market Wizards book, and then going from there.
Yeah, I've always recommended the Market Wizards book, but if you go back and read it, it's kind of like you see a movie and you think it was really, really funny, and you go years later you watch it and you're like, what was I thinking? I love the Market Wizard books. I recommend them highly, but a lot of those guys did a lot of crazy things and took a lot of big, crazy positions. So in some cases, it was more entertaining than educating, because they'll tell you, oh, you got to keep your losses small and have big risk, and then they talk about these huge trades that they made. So definitely read the book, one of my favorite all-time books, absolutely, but just have that caveat in the back of your mind. As I think Tom was mentioning earlier, the money management is crucial too. Just make sure you have proper money management. Adam A., you're back with us.
I don't know what happened. This is a sunny day here in New York, but it was like adios.
Oh, okay. Well, who knows? The question is, what advice would you give, and/or what resources would you recommend to someone who is new to trading?
Let me guess. Did everybody already say, buy my newsletter, right? Is that what everybody said?
Not yet, but I'm going to say that.
All right.
No, go ahead.
Buy my newsletter, too.
All right.
No, seriously. Read. That's what I do. Every morning, I literally spend like 3 hours. I read, every piece of research I can get my hands on. Not just newspaper stuff, but like notes coming out of the street. Other guys like you, just try to figure out whether there's any sort of continuity, and you start connecting the dots, because you see that continuity play out across the pages of newsletters or in research reports, and then especially once the market opens, and as you guys know, following trends. So yeah, just be a funnel for information. That's the single biggest thing I think I can say. Okay, cool. All right, Dean, let's go to you. Same question. What advice would you give, and/or what resources would you recommend to someone who is new to trading?
Yeah, absolutely. So I love the comment about risk control that we opened up with. I think it was Tom, and boy, I would just emphasize that. Again, back to Corey's point, right? There's plenty of methods. There's plenty of ways to make money in the market, but if you got to have a good risk control system, and I think the key metric that you need to measure is what's called a payoff ratio, which is a ratio of your winners to your losers, your average winning trade to your average losing trade. You can have a poor win ratio. You can only win 30-40% of your trades, and you can make stunning profit if you have a very high payout ratio. Yeah. Right? If you get both, if you can get above 50% and you get a good payout ratio, you got it going on, right? So I think those two key metrics are key. There's something called the risk of ruin tables there's a book on Amazon, Professor Nazar something, right? Google it. Risk of ruin, right? It kind of plots your win ratio, payout ratio, and gives you the probability of ruin. or probability. So that's a really good resource, and just to plot your results that way. And then in addition to all the other good advice that we've heard so far, I would say sim is your friend, right? Whatever trading system you're going to land on, you got to prove that you can trade it profitably. And there could be a system that you use, right, that Dave is using that he's profitable with that I couldn't trade. It just doesn't fit my psychology. It doesn't fit, what I believe about the market. And so I just won't have the discipline to follow the rules, right? My system's making money for me, but you may not be able to trade it. So you gotta find a system that you can trade consistently, and you got to be able to prove that you can do that. And the way to do that is in your sim account. Because if you can't be profitable in sim, you ain't gonna be profitable in live markets. And you got to get a real sample.
And I've actually never been an unsuccessful paper trader, but absolutely, it's kind of interesting what you said, because one of the epiphanies for me is I used to go home and tell my wife about all these great systems I had designed, and it might be a dozen systems, and that's bad off all the statistics that she get all. She'd just suffer a fool gladly. She wouldn't get excited, pretend to be excited. And then one day she said, "How many systems do you really need?" And I'm like, "What do you know about trading?" I'm like, "Wait a minute, that makes sense. You just need one. You need the one you're going to follow, and that's the one that you can follow, I should say." As far as
you got to prove it. You got to prove that you can trade it. And again, actually following the rules, doing the hard work of back testing, get a good sample, at least 30 trades across a variety of market conditions. If you can make money in sim, then go try it. But if you can't, if you're not willing to put that work in, you may get a really expensive lesson, right?
Yeah, on a similar vein, I see people that can't trade one pattern, and then they try to trade 10. It's like, if you can't get one right, then how are you going to trade 10?
Yeah.
Okay, cool. I have so many notes on this, I don't even know where to start, but as Adam joked, I buy my newsletter, but I do have a trading service. But you can follow along for free on that in the delayed version, and I would recommend you do that for free. And as far as free goes, I have a lot of information on my website. I have over 1,700 YouTube videos. A lot of those are on the website itself. I have over 500 posts. I have a dozen free reports, so I can keep you busy for a long, long time. And as I think Dean pointed out, it has to make sense to you. So watch all this free stuff that I have, read all this free stuff that I have, and if it clicks with you, then I would encourage you, obviously, to continue on to possibly a paid course or to follow along in real time on the trading service. So a little soft sale there, but there's plenty of getting to know me first. So and believe me, nothing's going to be different once I follow the exact same thing that I preach in all the free commentary. You'll just see it play out in real time. Nobody mentioned Livermore, which kind of surprises me. The Reminiscence of a Stock Operator, good book. I think Corey mentioned Mark Douglas, the late, great Mark Douglas. He's a good guy. I had a few interactions with him over the years, and he's a wonderful gentleman. His first book struck a chord with me more. It's called The Disciplined Trader. And I think I was struggling a lot more back then before when Trading in the Zone came out. So that one that's going to be one of my all-time favorites of all time. It's not, I don't think it's as polished as Trading in the Zone, but for me it really struck a chord with me and made a lot of sense. I'm working on a beginner's course now. It's not available, so it's not really a soft sell. But the thing about it is, when I first started working on it, I was working on mechanics, and I got to thinking, wait a minute, what do I really want to say here? It's like, well, what if I could go back 30 years and talk to this young punk kid that I used to be? Not that I'm not still a punk, I'm just older now. And what would I tell him? And if, obviously I couldn't say the market's going to be higher 20 years from now, whatever, but I would say, you know what, the battle is up here, and it's the mentality, it's key, and you really only need something really, really simple. I would just give him one of my simple patterns, such as Trend Knockout, which you can get on my website. And I would say just follow that and just do that and get successful with that one pattern. Don't forget about money management. Money management's important. Don't try to make things happen. If there's nothing going on, then don't worry about it. Don't do anything. It's okay not to do anything. And as I think Corey pointed out with Market Wizards, in the Market Wizards, I like the quote, intuition versus intuition. So don't try to make something happen when it isn't there. As somebody pointed out earlier, if you're a trend follower, there's no trend, don't try to follow the trend. Just sit on your hands, and it's okay not to do anything. And I don't want to digress too far, but again, as far as the psychology is concerned, we're just simply not made to trade. And what makes you successful in life could be the same thing that could be a hindrance in your trading in the trading world. So you have to be really careful not to be influenced by those things like taking action when there's none to be taken. And logic often doesn't apply. Last thing, I'll wrap it up. When you make a trade, let's assume you're buying a stock, you are not only making a relationship between you and the company, and this is a Tom McClellan quote, you're also forming a relationship between anyone who bought that company prior to you and those people who screw you. And I have a friend in the money management business in Houston, and his name is Dick Fruth, and many years ago he worked as a broker. He would actually take the shares from people when they would sell them, and he would sit them down, give them a cup of coffee, and say, "Why are you selling?" And it was like a buying a house, get divorced, kids going to school. Very rarely did it have anything to do with the underlying market conditions. So just remember that people buy and sell for a variety of reasons, so you trying to put your logic on top of that doesn't always work. Anyway, again, I can go on for about 3 days, so I better wrap it up. Let's go back to you, Adam. Any closing thoughts? Anything else you want to tell us about bullseyebrief.com?
Before we get into closing thoughts, if you have any kind of a trade idea you'd like to share.
Oh, forgot about that. Yeah, there's a new feature, or fairly new feature, that was added while I was away. It's called Trade of the Week. So if you have any free trade idea of the week, if you have any ideas or an idea you want to throw out, want to share charts or anything, feel free to do that at this particular time. So let's go to you on that, and then after you do that, give us any closing thoughts that you might have.
Yeah, you bet. Sacrilege in the house. I do not want people long the gold miners at this point. They have completely decoupled from gold. Gold miners are up anywhere from, if you look at the GDX or the GDXJ, which is the junior miners, call it 150 to 175% year to date. It's only August. Gold, by contrast, is up less than 30%. So you have a situation where the miners are up 5 times what gold is up. And yes, okay, I recognize that the miners have operating leverage. They don't have 5 times operating leverage.
Took the words out of my mouth.
Thank you. And I don't.
Well, you answered the argument. I was going to argue with you, but then you answered it. Oh, okay. Well, so much for controversy.
Yeah, well, or I don't know. Maybe we chalk this one up to great minds think alike, or hopeful minds think alike. But they've totally decoupled. You do not want to be long the miners here. My favorite, and it's like the pillar of absurdity, is Coeur d'Alene Mines. CDE now just goes by Deline Mines or Kerr Mines or whatever. They truncated the name because the stock's up so much. This thing's up like 600%. I mean, again, year to date, it's just crazy. They're up on that crazy emotion, and as Tom and I were discussing last week, the assumption you can get leverage out of these things. If you want leverage, go open a futures account. So please do not be long the miners, short them. As far as Bullseye Brief is...
Yeah, but the only thing you're doing is you're confusing the issue with facts. It's like they're going up, they shouldn't be, but I hear you. Okay. It's ticking. The clock is ticking, right? All right, I'm sorry.
Well, herein you have the debate between the fundamentalist who's looking at earnings or lack thereof, or over leverage, or insufficient cash flow. That's the way I look at the world, versus the way you're looking at the world, which is more the trend. And you're absolutely right. I mean, the trend has been up, but I'm saying that it's become divorced from reality. That's my issue.
I hear you. No. That's a good reasoning. All right, Corey. Trade of the week, free trade idea of the week, and anything else you want to tell us about anything, including afraidtotrade.com.
Yeah, well, like you, Dave, I give a lot of educational resources and trade ideas as they come out in the open blog for free, so I recommend looking at that too. Of course, your website too is great. When I was learning to trade, I would watch your videos, so I shout out to you there. Definitely. But yeah, and this, what I talked about in terms of crude oil, this was back on August 3rd, and we're still seeing this come true. The headline was "Crude Oil Finally Bounces and May Reverse Short-Term Downtrend." And just you can go back and look at afraidtotrade.com and see the argument that I made and how that was likely going to happen. And of course, that was based on one of my favorite trades, and it's called the support bounce, or higher frame support plus lower frame divergence. So I can make a cute little name for it. It was basically a higher frame level, like 40 per barrel in oil, and you're looking at the intraday chart, drop it down. That is a multi-swing positive divergence. And once you saw this go up, we're targeting the next spot was the 43 level, so the green spot on the chart. So it's my membership reports. It's what I do. We're looking at movements toward or away from certain levels, and we shape our trades based on that. So the trade that I got was this bounce up, hit this little 20-day moving average, and now, just as you mentioned earlier, trapped it, and we're just surging up in oil. So if I were looking at oil or trading oil, which I typically sometimes do in the intraday frame, I'd be looking at a bullish play continuation beyond 45, 46. It's going to push it up higher. But in general, this week, just look at the big names. Caution, keep your powder dry. And we go through a few of them just kind of briefly with you. What's the trade here? It's over, this is Google, overextended, over 800, divergent, volume is icky, and all these candles are reversal candles. Amazon, same thing. Looking at it, just creep, 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 candle, 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 not coming down, volume's not there. What else do we have? eBay, just to name a few. Same thing. Just creep, 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 candle, candle, candle over after this major up move. Walmart, just kind of disgusting, icky, whatever word you want to use for it. It's just there's not really edge, and as a trader, we look for edge. Netflix, same thing. If there isn't edge, if there isn't a trend, if there isn't movement, keep your powder dry. Go read some books, watch some webinars, attend some presentations, something. But don't risk your hard-earned capital in a market like this. Again, the S&P 500. It's just, what kind of adjectives do you use for this? Sideways, no trend, flat, divergent, but creeping up. So wait for the market to swing and get these swing trades in. And if you're a swing trader, fine. But you can also do these intraday, what I do. You create these movements on the higher frame and then trade them out on the lower time frame. That's my specialty that I do for that. So I hate to be boring, but I just, if there's no edge, keep your powder dry and be safe as a trader. There'll be multiple times you'll have these breakouts, rallies, downtrends, etc. But at the moment, just protect yourself.
All right, cool. Yeah, that's something I wish somebody would have told me at one point. You don't always have to be hitting that little button like the rat looking for the cocaine. Just sit back a little bit and wait for your pitch. Dean, let's go to you. Trade of the week, any ideas there? And then anything else you want to tell us about FollowMeTrades.com?
Yeah, you bet. Yeah, you bet. Hopefully I'm sharing my screen here. And just to tag on, I think it was your comment, Dave, and Corey. Sometimes the most profitable trade is no trade, right? So I think that's good advice. I'm showing Vail. I think it was Adam talked about being out of the miners. We've already made our money in gold, and we're out of gold. But Vail is a
good man.
Yeah, we did real well. We hit a home run on that. But we're still in Vail, which again is not just gold, right? They're a pretty diversified operation, and we traded. This is Wave 3, the big move. Before we traded that was probably our biggest trade this year. It's a smaller cap stock, but now we're trading Wave 5, and we're in profit. We got in here way down at the start, right about $5. We're up here at 577, so pretty nice profit. We got a target up here into these green lines, 627 to 776. We're just trailing up and loving life.
All right, cool.
Here.
All right, Tom, let's go to you. You have a trade of the week for us, and then anything else you want to tell us about sevensreport.com?
Sure. If I were going to do something this week, I think you could probably buy the dollar. Either if you're a currency trader through futures, or UUP is an ETF that basically gets you long the dollar. The Fed minutes are going to come out Wednesday. They're probably not going to be too dovish. Dollar came in on Friday. There's some decent support at 95. It's sort of hitting a shorter-term uptrend. I think there's probably a decent risk reward in getting long the dollar here. Sevensreport.com comes out every morning at 7 a.m. Monday through Friday. Covers equities, commodities, currencies, bonds, and economics. It's a market cheat sheet. You can go onto the website sevensreport.com, SEVENS report.com, and sign up for a totally free 2-week trial.
Cool. All right. As far as trade of the week, we are long CNX, which I think is a coal stock. Believe it or not, and so far so good. Longer term trend following mode. We've been long since way back here, and then we actually flipped out for partial profits. But it does appear to be setting up again. I like the way it broke out, pulled back, So I think this is worth a shot. Last week I mentioned, or week before, whenever I was last hosted, I mentioned PI. We are long this stock in the model portfolio, and the buy was any close above 20, and I think any close now, if you miss the original trade, any close above this high here, I think it'd be worth a shot. IPOs are very dangerous to trade, but if you know what you're doing, they can be a wonderful vehicle for trading. When they're making new highs, everyone who owns them is happy. There's no shorts that are allowed, at least by the public, early on. There's a quiet period that helps to keep anyone from saying anything to kind of mess them up. The beauty is they either fly or they die, as I often say. It's like they either go straight up or straight down. And lately, there's been a great demarcation between those that are headed higher and those that are headed lower. It's kind of like the old Will Rogers saying, buy stocks that go up, they don't go up, don't buy them. And with IPOs, you can almost just do that and do quite well. Just to wrap things up, DaveLandry.com. I answer all my own emails, by the way, DaveLandry.com. Watch a few videos, download some free reports, get a feel for what I'm doing, and then feel free to ask questions once you get a feel for things. Also, I do a free webinar every Thursday at 11 Eastern Daylight Time, and we have a lot of fun. I don't take myself too seriously in that. I'll lecture for a while, maybe 30, 40 minutes, and then we'll hop into the overall markets, and I take individual stock picks. So if you want to talk about an individual stock, feel free to bring it up in the webinar. Okay, I think that pretty much does it. Great show this week, packed full of information. I've got a lot of notes and things to look into afterwards, so I really appreciate you guys. David Kosminder, thanks to you again. Thanks to Timing Research. And I'm going to go ahead and let you wrap it up and mention everybody. But thanks you guys. Great show.
Thanks, Dave.
Thanks, everybody.
Thanks, guys. Yeah, it's a great show. And just want to remind everyone watching, you can go to TimingResearch.com and you can find all the past reports as well as the past shows, including this one in a few minutes. The recording will be available. Just want to say to join us next week for the 100th episode of this show. Neil Batho and Jason Jankowski, who are actually both on the first show, will be on again, along with James Romelli and Christian Fromhertz, and Dave Landry will be back to host. So, and Dave, that'll actually be your 60th show, I think.
Oh, wow, wow.
So
you think I'd be better at this by now?
No, you were great.
Thank you.
So, yeah, so next week will be the 100th show, but I just want to end with thanking all my guests for this week. So Tom Essaye of SevensReport.com. This is your first show, so appreciate you being on. Always good to have you people.
It was fun.
Adam Johnson of BullseyeBrief.com. Dean Jenkins of FollowMeTrades.com. Corey Rosenbloom of AfraidToTrade.com. And, of course, Dave Landry of DaveLandry.com. So thanks, guys.
Thank you.
Thanks, guys.